Not only am I going to tell you 5 common mistakes that new business owners and entrepreneurs make, I'm also going to give you a quick way to set up your chart of accounts to make sure that your business expenses are tax deductible. Stay tuned. Hey everyone, my name is Christian Brooks. I am the owner of Brooks Bookkeeping and Accounting Services, where I aim to empower and educate women of color entrepreneurs and small business owners on their business finances and taxes. I've been doing accounting work for about 10 years now, and I've found that topics like business finances and taxes can be very overwhelming for folks. So, my goal is to break these topics down to make them more digestible, approachable, and understandable. So if you're interested, go ahead and hit that like button. And if you want to see more videos like this, hit that subscribe button. Let's get into the video. In this video, I am going to share 5 common mistakes that new business owners and entrepreneurs often make. Mistake number 5, not setting up a business bank account. It's imperative that you set up a business bank account. You do not want your business expenses coming out of your personal account and your business revenue going into your personal account. When you are mixing your business finances and your personal finances, it makes it very difficult for you to track your revenue and expenses, which in turn makes it very difficult to track your profit and to file your taxes. You always want to make sure you are keeping the two separate so that you can keep clean books when doing bookkeeping. But also, setting up a business bank account can give you some advantages. One of the advantages is banks like Chase, Bank of America, they often have promotions when setting up business bank accounts. Like you have to meet a certain requirement and you will get $200 or you'll get $500 or something of that sort. And you can use that money to offset the cost that you had to pay in order to set up the business. So if you're not setting up a business bank account, then you are missing out on basically free money. So make sure that you're always setting up your business bank account. Mistake number 4, not collecting sales tax. So, depending on your business and the state that you're in, you have to collect sales tax, especially if you are an e commerce business. If you're selling something online or even if you're selling something in person, you have to collect sales tax and then pay the sales tax to the state. Some of you all are not collecting sales tax at all. If you are collecting sales tax, you're not collecting the proper amount of sales tax. So, you always want to make sure that you talk to an accountant who can get that set up for you to make sure that you are collecting the proper amount of sales tax, or you can call me or contact me at www.christiannbrooks.com/bookkeeping and I can get your sales tax set up for you. But you want to make sure that you are collecting the appropriate amount of sales tax. You are generating sales tax reports every month and yearly reports, and you are paying sales tax to your state. Mistake number 3, not setting up your business properly. So when it comes to setting up your business, some of the basic things that you need to do is file articles of incorporation or articles of organization and get your EIN number, right? However, there are certain states that have additional requirements when it comes to setting up your business. So if you're using a service like LegalZoom, you need to make sure that you are also meeting your state requirements and you're abiding by your state requirements so that your business is set up legally. For example, the state that I am in requires businesses to sign up for a tax and revenue account. You have to get a certificate of clean hands and you have to get a basic business license in order for your business to be legal. And then you have to renew all of those things every 2 years. So if you are just using LegalZoom and you're not looking into all of the other requirements that come along with setting up your businesses, your state requirements, then your business is probably not set up legally. So you want to make sure that you know all of the state requirements that goes with setting up your business so that your business is set up legally. I would recommend going to a professional, maybe a lawyer or an accountant, to set up your business because typically they have all of this information. Somebody who's local will typically have all of this information. However, be very discerning on who you go to because I have had some friends and clients who have paid attorneys to set up their business. The attorney took the money and then never contacted them again. So you be very discerning on who you give your money to. Give a deposit. make sure you pay a deposit and then give them the rest when the job is complete. But also, this is something that you can do on your own. It's a little tedious and you have to search for the information, but you could save a little money in terms of lawyer fees and accountant fees by just setting up the business yourself. But make sure that you're doing your research, you know the requirements for setting up a business in your state so that your business is set up legally. Mistake number 2, not understanding the tax implications for your business structure. When you set up your business, you can either set up your business as a sole proprietorship, partnership, a LLC, or a corporation. All of these different structures have different tax implications and liabilities. The IRS does not have a tax designation for an LLC. So if you set up an LLC, your default tax designation will be a disregarded entity, which means you are taxed the same way that a sole proprietorship is taxed. This means that everything that happens with your business passes through to your personal tax return. So you will file a Schedule C on your personal tax return, or if you're a farmer, you'll file a Schedule F on your personal tax return. And you also have to pay self-employment taxes. So self-employment taxes as 15.3% on top of your normal marginal tax rate. So the 15.3%, it is Social Security taxes and Medicare taxes. Normally when you have an employer, you are only paying 7.65% and your employer is paying 7.65%. But since you are the employer, you are paying the whole 15.3%. Now, there is an opportunity if you have an LLC for you to change your tax designation to an S Corp or a C Corp. And depending on how much revenue you're bringing in and depending on the type of business that you have, it might make more sense for you to change to an S Corp or a C Corp, but you have to understand the taxes associated with S Corp, C Corp, disregarded entity in order for you to make that decision. And sometimes this could save you thousands of dollars in taxes. So it is extremely important that you understand the tax implications when you are setting up your business so that you can make the best decision for your business and save yourself some money. Mistake number 1 that new business owners and entrepreneurs make is not doing any bookkeeping. It is so important that you do bookkeeping when you start your business. I made a video on 5 reasons why bookkeeping is important, which I will link below. So I won't go into too much detail. If you want more information about that, go ahead and click on that link so that you can watch that video. But basically, doing bookkeeping is the basis of your business's financial structure. If you are not doing any bookkeeping at all, then your business finances are going to be all over the place. And there are important decisions that you need to make and important things that need to be done that you are not going to be able to do until you get your books in order. So do bookkeeping from the beginning of your business, and things will be much easier for you later on down the line. Now, if you need to get your books cleaned up, feel free to reach out to me at www.christianandbrooks.com/bookkeeping, and I can help you with organizing your books and getting everything cleaned up so that you are on the right track. But please, please, please make sure that you are doing bookkeeping. If you have any questions or there is a topic that you want me to cover regarding business ownership or entrepreneurship, go ahead and leave a comment below. If you would like more information or you would like to contact me, visit www.christianandbrooks.com/bookkeeping. Okay, so let's get into setting up your chart of accounts. So what is the chart of accounts? So the chart of accounts is an index of all of the accounts within your accounting system or within your company's general ledger. As a new business owner, your business does not have a chart of accounts yet. So an easy way to quickly set up your chart of accounts is to go to the IRS website and download a Schedule C if you are an LLC and you're being taxed as a disregarded entity. Or if you are a farmer, you can download a Schedule F. So on the Schedule C and on the Schedule F, you will see different line items for business expenses. You can copy those line items and put them into your chart of accounts. and make sure that your business expenses fit into those line items. So, for example, you buy pencils, paper, whatever have you, that will go under the office supplies account. And that's just a quick way to make sure that you are one, accounting for your expenses, but two, they are tax deductible. Now, please don't try anything crazy like putting something that clearly does not fit under a certain category under a category to try to get a tax write-off. So, for example, if you try to buy a blender for your house, do not put that under a office expense. That is absolutely not an office expense, and you can get audited. And if you do get audited, you will have to show proof that that was a business expense. If it was not a business expense, you will be giving Uncle Sam back his money. So don't try to do anything crazy. Just use this tip as a quick way to set up your chart of account if you are doing your bookkeeping by yourself. If you're not doing your bookkeeping by yourself, you have an accountant, a bookkeeper who's doing your bookkeeping, then you don't have to worry about that at all. Also, this is just for new business owners. As you continue to get to know your business and your business develops, your chart of accounts will develop. So you will probably be changing things a little later on down the line, a couple years down the line, or whatever have you. This is just a quick way to get you started and to make life easier for you when you are filing your taxes and make life easier for your tax accountant. I hope you found this video helpful. If you find yourself stuck with bookkeeping or taxes, feel free to contact me. My information is in the description box below. See you next time.